What's up, guys? So, as the video states, I'm going to be teaching you guys how I maximize my profits on winning trades. The concept that I'm going to talk about is something that I deem a little bit more advanced because it's intangible. And I am a firm believer that the intangible concepts in trading are drastically more valuable than the tangible concepts. Something like risk reward is obviously very tangible. It's this number right here, 7.5. That is statistical. So, I mean, there's not really too much that needs to be said about that. Something like perception of probabilities or conviction or even opportunity cost, those are all intangible concepts that you kind of have to just get a feel for. And in order to start getting a feel for them, you have to be able to apply your own sense of discretion. So, in order to form a sense of discretion, you have to have experience, and obviously, the only way to build experience is to actually get out there and start trading. So, I did kind of bait you guys a little bit, but the topic that we're going to be talking about is conviction. And it's essentially just when you feel as though the market is shaping up in an ideal sort of manner that fits within your system beautifully, you typically want to size up a little bit more. So, I guess the preface to this should be that in order to understand a higher sort of advanced level of risk management and putting on position sizes and kind of scaling along with your conviction, you do have to understand the very bare bones basic level to manage risk, which frequently people will tell you something along the lines of like, hey, just risk 1% of your portfolio amount. There's a lot that goes into that. When you're thinking about risk per trade, I want you to be thinking about your risk tolerance. So there are some of you out there who have a $10,000 net worth and you're ready and willing to risk all 10,000 of that. Let's say that you're 18 years old, you have nothing to lose. You could probably supplement that portfolio pretty quickly in the event that you draw it down to absolute zero and you liquidate everything. So there are some of you who are in that kind of a position. There are some of you who might have $1 million net worth and it breaks your heart to see a loss of $1,000. So obviously 1% of a million is $10,000 unless I'm a complete idiot. But you may not be willing to lose 1% of your portfolio. So you kind of have to think about your own way of managing risk. And once you get a feel for that, you develop a static way to be able to put on trades and develop experience. With that experience is going to come a sense of discretion and a feel for your own system and the way that you like to operate when you trade markets. So for something like this, for Lido, this is a trade that I have on at the moment. This is the Lido BTC pair that you're looking at. This is something that I've been preying on for quite some time now. So this was the original setup. It was just a simple buy the dip of the 4-hour 200 MAs plus the demand zone retest. Market structure is intact and screaming upside. So I would assume higher lows, top right corner. That's all three parts to my very, very complex three-part system. Market structure, moving averages, and gray boxes to portray support and resistance. So as long as I have those three things, I'm allowed to put on setups. That's where I feel comfortable. That's where I have the most sort of confluence. That's when I like to do business, when all of those three things are confluent with each other. So for something like Lido, this is what I call an A plus setup. Whether I take it or not, and I put on this trade or it gets stopped out or not, it is a quality trade per my discretion, per the several years that I've been trading crypto specifically. I can confidently say that if I take this setup more times than not, I'm going to be rewarded in the long term. So it doesn't matter what happens in that one outcome, but it is a quality trade, meaning the probabilities and risk reward have kind of shaped up in a way that it's sort of ideal per my own discretion, per the way that I like to trade. It has set up beautifully. Now, the reason that I've kind of told you in the beginning of this video is that you're getting baited is because there's nothing that I can really do to show you what your form of discretion is going to be and when you are going to be able to develop a sense of conviction, right, per your own discretion, per your own experience, per your trading system and your style, the way that you approach things. I will never be able to tell you that. No one will ever be able to tell you that. That's something that you have to come to find out on your own. But what I can do is kind of give you some insight to the way that my mind works. So maybe you can use that as a framework and go apply it to your own system. So the reason I take this Lido trade is truly, don't overcomplicate it. I mean, honestly, it's just because it looks amazing. And that's it. When I go and look at this and I apply a 4-second kind of rule, I cannot disrespect these 4-hour 200 moving averages. I mean, per my discretion, they get respected absolutely beautifully. So I would imagine that price action respects them and continues that trend now that we've broken above them during this price action. That means that they're an ideal sort of region for me to watch in the event that they get retested as support. The conviction comes in when confluence starts to become a factor, and with those 4 hour 200s, we also have a very strong uptrend on the daily chart, and we have a key demand zone, something like this 7,300 sats region. Now I can be able to justify a very strong sort of stance on Lido BTC. And with that justification, I can lean into my gut more and be able to trust my experience and my resume that I've built for myself for the past 7 years. I can use all of that to be able to justify putting on a bigger position size to really make the most out of this quality trade, what I deemed an A plus setup, and just try and milk as much as I possibly can from this kind of market environment. So with that, I will say congrats to any of you that did take this Lido BTC trade. I was talking about it a ton in my free Discord. So if you guys are not in that Discord, you might want to join. I just get to come in there and post all of my thoughts daily on BTC and anything else that interests me. You guys can come in there and ask me any questions that you like. The Discord is brand new, but I am very active in there and I do try and respond to you guys and interact with you and provide value as much as I possibly can. And again, it's totally free. I don't ask anything of you. It's just community. Come hang out, come say what's up. So that was a bit of a shameless plug, but again, it's a free Discord, so I don't really care too much. But moving on, if you read a very lengthy Twitter thread of mine that discussed discretion, which I'll probably have to make a video on sometime soon, but if you did read that thread, you know that really discretion is the ability to know when not to apply something rather than when to apply something. You're going to look at me and you're going to say, Mercury, there are 1,000 times where these moving averages shape up absolutely beautifully for whatever asset that I'm looking at, but it never works out, right? I draw the gray box the same way that you do. The market structure is saying a certain thing, but it's just not really working. The difference there is the ability to know when not to have a sort of convicted stance on something because your sense of discretion has kind of disallowed that very strong take on the market. So if that's too hard to keep up with, I'll give you a quick example. When you look at this Bitcoin chart, there are several times where the exact same kind of idea shapes up beautifully. The difference here is the ability to know when not to apply my system. And I won't dig too deep into it, but this is also why people sell you algorithms instead of using it themselves, is because the algorithm is going to outperform you when it outperforms you, but the algorithm will also not be able to have any sense of discretion to turn itself off. So there's a drastic sort of discrepancy in the ability to maximize profit because you apply something a static way each and every single time. Conviction does not stem from the ability to acknowledge a pattern or a certain trigger for a system on paper and be able to translate it in real time. Discretion and conviction stem from the ability to know when not to apply that sort of trigger and not to apply that sort of entry. If you can get a rough idea of when not to use your system and when not to be very convinced on a bias for the price action in any direction, then theoretically you should be able to know when to apply that sense of discretion and conviction. The inverse is not true. So just because you know how to apply it and when to apply it does not mean that you know when not to apply it. Hopefully that makes sense. But you can see literally during this candlestick, I'm over here tweeting. I'm basically just going to assume that the market is going to chop sideways or go down at worst. And either way, whether we go sideways or we go down, the best thing for me to do is to just sort of not pay attention to this market and not really look to be too eager to trade it in either direction. If you do know me, you know that this stance on the market stems from the fact that I am primarily a long bias trader, and most of the money that I do make from markets comes from swing trading spot positions. So when the market shows me a very fruitful opportunity and it shapes up and it gives me a very clear cut bias on the market, I'm able to use my gut a little bit and be able to justify using my own intuition, my own conviction, and be able to size into a strong position and allow the market to either prove me right or force me to adjust and accept a loss. So, again, if you're a beginner trader, this may be too much to digest all at once. It may be very overwhelming, and it doesn't sound like it is, but it truly is when you go and put it into practice. So, at first, it is probably a good idea to just have a static kind of risk, something that really adheres to you. So, you could have a very flat risk on every single trade that you take. You could just risk $100, or you could go closer to like a paid group leader's advice and maybe start risking 1% on every single one of your trades. But the idea is to just have a static risk and be able to build experience and be able to form a sense of discretion along with all of that until eventually you get to a point where you are so comfortable with your system and your way of operating and the mindset of which you approach markets with that you know when something is not really applicable, and you know when opportunity is right in front of your eyes and you have to kind of pounce on it. So again, this is kind of a hard video for me to make because the concept that I'm discussing is intangible and I can't really help you too much. I can provide a sort of path for you to follow very broadly and hope that over the long term, you eventually find your way closer to that path. Listen, if you guys do find value in this stuff and you want to support me on a greater scale, trading on my Bybit ref link is the greatest way to support me. And so if you guys do that, I really appreciate it. And also, I try and give back to you guys. I do Bybit giveaways every single month. The past couple months, I've been giving away PS5s like crazy. So if that's something that you're interested in and you want to support me above and beyond, I really do appreciate it. And you'll be eligible for any giveaways in the future. So with that said, much love to you guys. I hope you found value in this video. And if you did, like, comment, subscribe, all that YouTube influencer bullshit. Share this with your grandmother because I'm sure she wants to know how to maximize profits in markets too. But anyways, guys, much love and take it easy.